So, I very often you will hear the term, or at least the phrase, that the EU is a regulatory superpower. And that is generally the case. It has a lot of very big regulatory bodies. Regulation is sort of the bread and butter of what the EU does. The single market is a very regulated sort of area that it operates in. The EU sort of funds those bodies. And we've seen very recently, even in the UK, chemical regulation, classic, I don't know, post-Brexit situation, I suppose. You have 5 chemical companies in the UK, just 5, and only one of them was like massively pro-Brexit. Also, just happens to be a donator to the Tory party as well. Gee, wonder if that has anything to do with anything. Um, but we've seen twice. One very just recently, and another, I think it was about might have been 2 or 3 years ago now. We made a video about it, but again, I forget how long ago it was now. Of them essentially just deregulating worker protections, or at least, shall we say, the regulations that would cover what a company would have to do to protect their workers in terms of, clothing, a working in a chemicals factory, because you'd think that would be kind of important, you know. But we have seen very recently, both in those 2 examples that I've mentioned, the government just quietly bring down these regulations, which, as I've said before, very worrying when you do have these types of people now in charge of those levers, where sometimes they can just quietly ratchet things down and they don't even have to go to Parliament in order to remove, or even lower some of these regulations. Again, quite worrying. But we're not talking about the UK today. Today, we're talking about Morgan Stanley, a very, very, very big bank. And they have now been accused, and we must say accused, of trying to dupe EU regulators to comply with new post-Brexit rules. So it's not just governments that sort of try to sort of do this. It is businesses as well that will try and do this too. So this is yet again why having strong not only regulations in place, but also, as we've said before, the regulatory bodies, which are effectively like the policemen of regulations, having those staffed and those in place is good. But of course, as we've talked about before, those bodies, not only have they been criminally understaffed since Brexit, but they've also been horrifically underfunded, meaning that their jobs, or their effectiveness in their jobs, has been made increasingly harder to do. So, as always, before we do go getting more into this, please do remember to click on the like, share, and subscribe button. And of course, down below, there are links to my Patreon page and a one-off link called Buy Me Coffee, where you can buy me coffee. And of course, as always, thank you very much to all those people who do help and support the channel. Like I say, there's the Pony Club down below as well, and the YouTube thank you button. So, let's crack on into this, coming from City AM, with the title of Morgan Stanley accused of duping EU regulators to comply with post-Brexit rules. So Morgan Stanley has been accused of making up a fake job title for one of its employees in an attempt to try and trick EU regulators into believing it had moved its top execs to Europe to meet post-Brexit rules. Because remember, you've got, when the sort of the split finally happened, if you want to sort of continue banking, or at least use your banking services in Europe, then you've got to have officers, personnel in Europe to be able to sort of justify, being able to continue with that in Europe. Now, it seems that Morgan Stanley in particular didn't want to, shall we say, have these big moves. That, bear in mind, we have seen other banks do these types of things. So it seems that this is what they've tried to do by creating as we'll find out in a bit more, a fake job title to try and, trick the EU regulators and thinking, oh, we've moved to Europe. We've moved these people to Europe. So let's get more into this. So the Financial Times reported that a German banker who was hired back in 2021 as an executive director with a rank below managing director was given the title head of loan trading, but was allegedly told not to actively use the title. In a German court case, which is now hearing this appeal to his dismissal from Morgan Stanley, the banker said that he had been told by his superior that his title was, quote, only existed on paper. So interesting. You give them a fake title, and yet you wonder why a lot of people argue very heavily that banking should be a very heavy regulated industry. Once again, the Edinburgh reforms that we've seen Rishi Sunak put in, which we've described before as taking the seatbelt out of the car. Um, it doesn't matter, sooner or later you are going to get in a car crash, whether it's caused by you or by someone else. And of course, having a seatbelt in event of a crash gonna be a lot more handy. And like I say, the Edinburgh Reforms is pretty much, taking that seatbelt out of the UK economic car. But it continues. So instead, he's been given a title solely to meet regulatory requirements, as the European Central Bank has now pushed international banks to move its top staff managing European businesses to the continent after the UK left the European Union. The banker claimed that his job had been to find and sell distressed European loans rather than overseeing a trading desk, giving him more ability to impact the bank's risk profile. So you give someone a fancy title that doesn't really mean anything. Like I say, it only exists on paper. Um, to try and say, oh yeah, we've moved people over to Europe. Meanwhile, there's a guy who's got multiple job titles. I have to wonder how often this might actually be a thing. Is this maybe the first of many such cases it is going to be, or did Morgan Stanley generally try to do this just because, let's say, a top exec didn't want to move from London? I think that might be the more case, but we'll see what happens in the future. Um, So, changes to Germany's employment law since Brexit mean that the material risk takers can now be fired more easily than normal employees, meaning that a misleading job title has left the banker more vulnerable to dismissal. The bank's argument were rejected by the court, which ruled that the formal position was not enough to qualify him as a material risk taker, which should then in which should in, which instead be decided by actual risk takers and competencies. The court added that it was not convinced that the banker was given, quote, relevant tasks, responsibilities, and competencies, and ruled that legally he was a no risk taker. While the case does not name the bank, sources with the knowledge of the case told the Financial Times that it was Morgan Stanley. Morgan Stanley declined to comment on the report. Last month, Morgan Stanley reported that profits had missed analysis expectations due to not paying over $500 million in one time charges over investigations by US authorities. Gee, gee, Morgan Stanley. And this is why you need strong regulations, because companies do this stuff all the time. They do this all the time. Whether it be, as we said, oh, we'll give you a title on paper just to, look good, but you don't, have the roles and responsibilities that maybe the title would go with it, as was said there. Or they do numerous other things. They cut corners. They use cheaper ingredients in chemicals or food or whatever stuff, just to save, a couple of pounds or a couple of pence here and there. This is why, once again, you need strong government interventions, strong institutions, strong regulators to be able to bring these companies and hold them to account, so that if they do start doing this, then you stop the problem before it happens. Now, obviously, this was in banking, um, in this case, but let's go back to the chemical industry that we mentioned at the start of the video. The fact that um, the workers' safety protections and the clothes that the workers at one time were legally now required to have now been substantially lowered. What's going to happen now? You're probably going to start seeing workers who work in the chemical industries start to probably either get like serious burns, uh, damage to the skin, all kinds of accidents, and all that could have been prevented if we'd kept chemical regulations for workers' safety clothes at the level that they were. But of course, one of them happens to be, shall we say, a big donor to the Tory party, has now decided to sort of ratchet these things down, or at least said, I will give a substantial in probably a substantial gift to the Conservative Party. Should you like to do this? Probably had, so we say, a word maybe in a certain minister's ear and gone, well, if you lower this makes the UK chemical industry so much more competitive. So we'll see what happens, but I would not be surprised if you started seeing, again, if these aren't sort of re-raised, you would start to see workers start to get serious injuries working in the chemical industries. Wouldn't surprise me. Bear in mind, these were sort of lowered 2 years ago. Wouldn't surprise me if that already happened. And the fact that they've lowered it again, very worrying indeed. So, as always, thank you very much for watching. And of course, as always, we'll see you all next time.